Income and expenditure account and receipts and payments account. Dear students, today we will discuss about income and expenditure account and receipts and payments account. Important points of distinction between receipts and payments account and income and expenditure accounts. Conversion of receipts and payments account into an income and expenditure account. Periodical statements of accounts. A distinction of capital and revenue naturally leads us to a consideration of the varied final statements prepared by concerns of different nature, such as revenue account, income and expenditure account, receipts and payments account, and a receipts and expenditure on capital account. These terms are no doubt frequently very much employed in commercial circles, but it is necessary that we should have a clear understanding of what each such statement means and in what particular respects one differs from the other. Revenue account. This is another term for profit and loss account and is used by insurance companies and undertakings such as railways, gas, water and electric light companies, etc., which have to submit their periodical accounts in forms as fixed by several statutes. Receipts and payments account. Receipts and payments account is a summary of actual cash receipts and payments extracted from the cash book covering a particular period. All cash received and paid during the period, whether on account of capital or revenue, would be included in this account. The receipts are entered on the debit side and the payments on the credit side. Athletic and sports clubs, charitable institutions, etc., where the object of the enterprise is of servicing and not that of profit making, generally present periodical accounts in this form to their members and subscribers. The account commences with the opening balance of cash and similarly closes with the balance of cash at the end of the period. As it is a mere summary of cash transactions, it does not include any income or expense outstanding and naturally fails to reveal the actual income or expenditure of the period it covers. Income and expenditure account. This is a revenue account prepared by non-trading concerns such as educational institutions, hospitals, libraries, etc., and includes all income earned during a given period, whether actually received or not, and all expenditure incurred for the purpose of earning such income, whether actually paid or not. This account serves exactly the same purpose as the profit and loss account in a trading concern. The income in this case will be set out on the credit and the expenditure on the debit side. It will naturally include revenue items only and will serve to indicate either the excess of income over expenditure during the period or vice versa. As this account takes the place of a profit and loss account, it presupposes the books having been maintained on double entry principles and must always be accompanied by its relative balance sheet. Important points of distinction between receipts and payments and income and expenditure accounts. The main points of distinction between a receipts and payments account and an income and expenditure account may be summarized as under: receipts and payments account and income and expenditure account. 1. Income, receipts and payment account is a summarized statement of cash transactions of a particular period. Income and expenditure account takes the place of profit and loss account in a non-trading concerns. Receipts and payment account must necessarily commence with the opening balance of cash brought over from the preceding period, if any. Income and expenditure account does not commence with any balance. 3. Receipts and payment account restricts itself to cash transactions only and does not take any account of outstanding income or expense. Income and expenditure account includes all income, whether received or accrued, and all expenses, whether paid or outstanding. Receipts and payment account makes no distinction between capital and revenue receipts or payments and includes both capital and revenue items. Income and expenditure account includes revenue items only. Receipts and payments account. Receipts are shown on the debit side and the payments on the credit side and expenditure credit side. Income and expenditure account. Income is shown on the credit side and the expenses on the debit side. Receipts and payment account does not necessarily include items relating to the period It covers and may include receipts and payments pertaining to the preceding or succeeding period. Income and expenditure account must bring into account only income and or expense belonging to the period under review. Receipts and payments account, the difference between the two sides would represent the balance of cash at the close. In income and expenditure account, the difference between the two sides would mean either excess of income over expenditure or vice versa. Conversion of a receipts and payments account income. Receipts and payments account need not necessarily be accompanied by a balance sheet. Income and expenditure account must always be accompanied by its relative balance sheet. Conversion of a receipts and payments account into an income and expenditure account. The steps necessary to convert a receipts and payments account into an income and expenditure account will be as under. Exclude the opening and closing cash or bank balances. Eliminate all items of capital receipts and payments. Exclude income of the previous period or any income received in advance. Provide for accrued income, that is income earned during the period and not received. Exclude expenditure either of the preceding period or the succeeding period. Provide for expenditure due and not paid. Bring into account items such as bad debts, depreciation, etc. that would affect the net income. The statement thus prepared will embody only revenue items of a particular period and will serve to indicate the excess of income over expenditure or the excess of expenditure over income of that period. Some important points and terms are given below. Capital receipts represent any additional capital brought in or amounts received by way of loans, deposits, or the sale proceeds of any fixed assets. Revenue receipts embrace income derived from sales, interest, discounts, commission, etc. Receipts and expenditure on capital account. This is a statutory term for the capital account statement which companies adopting the double account system have to publish. On the right hand side of this statement appear the receipts on account of shares, stock, debentures and other fixed loans, and on the left side appear the cost of construction and other items of fixed capital expenditure. Trading capital is represented by the amount made up of fixed and floating assets. Working capital is the amount left for working the business with after the purchase price of the necessary fixed assets has been paid. Water capital is represented by the issue of additional capital without any extra payment in cash such as bonus shares. Capitalized profits are profits which are retained and sunk in the purchase of additional assets instead of being distributed or withdrawn from the business. Wasting assets. Wasting assets are those assets of a fixed nature which become valueless through effluxion of time, such as lease, patents, or those which decline in value through wear and tear, such as plant and machinery, or those that become exhausted or consumed through being worked, such as mines, quarries, cemeteries, etc. Fictitious assets are those items which, although not representing any tangible value and which cannot be realized, appear on the asset side of a balance sheet, such as brokerage on shares and preliminary expenses not written off, debit balance on profit and loss account, unexpired insurance or taxes, etc. Liquid assets are those which are readily convertible into cash and are thus immediately available for meeting liabilities. These are cash, bills receivable, gilt-edged securities, etc. In the next lecture, we will discuss about income and expenditure account and receipts and payments account problems and solutions.